Hey everyone, welcome back to Corporate Decoder. Today we're diving into Hammer Technology Holdings' latest financial report. A document so exciting, it almost makes filing your taxes sound fun. Almost, you'll see. So what's this report all about? Hammer Technology had to refile their previous annual report after finding some errors in their accounting. This is a bit like realizing you forgot your wallet after you've already paid for dinner, awkward and requiring a fix. They're mainly focused on financial technology like their Hammer Pay platform and wireless telecommunications infrastructure. Let's break down what those accounting oopsies were and what they mean for the company. First up, they realized they needed to set aside an extra $98,900 for accounts that might not get paid. Think of it as putting aside money because, some friends are good for borrowing but not so good at returning. This means they were initially a little too optimistic about how much money they'd actually collect, and that can impact their overall financial picture. Next, after getting rid of their telecommunications businesses, Hammer decided to reduce the value of certain assets, things you can't touch, like patents and trademarks. This is like admitting your old guitar isn't worth as much now that you're not in a band. This can affect their asset value, and when investors see this, it can signal weakness. Then they found some errors relating to the calculation of useful life for their assets. After re-examination, they realized that a portion of such assets were subject to amortization or depreciation, which they had previously not amortized. It means they are now depreciating the expense of the assets during the years they used them for, rather than simply depreciating them on day one. It's worth mentioning the report includes a section reminding everyone that all predictions about the future are subject to change. They're not crystal balls, but best guesses, and there's a lot that can go wrong, from economic downturns to not being able to keep up with technology. One major concern is the global economy. If things slow down or if financial markets get rocky, that could hurt their business, especially when it comes to money transfers and payments. Another risk, they say, is that they have to maintain good relationships with agents and businesses. That means access to banking, which is critical for a global financial business like HammerPay. If those partnerships falter, it can be a big problem. They depend on other companies to manufacture their products. If those manufacturers don't perform well or violate laws, it can interrupt their shipments and hurt their reputation, and we all know that in business, reputation is everything. One quirky note, their company rules protect their leaders from certain types of lawsuits. It's not about letting them off the hook for intentional wrongdoing, more like providing a bit of a shield in case things get messy. Now, the financial statements themselves are not all sunshine and rainbows. The auditors, the people who check their numbers, raised concerns about the company's ability to stay afloat. Hammer has been losing money since they started, and it is dependent upon obtaining financing to pursue extensive activities. Hammer relies heavily on technology. If something goes wrong with their computer systems, like a cyber attack, it could disrupt their operations and expose them to lawsuits. Like any small stock, their share price can be volatile, which means it can go up and down a lot. This makes it harder for investors to make a confident decision. Being a penny stock, they have to work extra hard to make sure all of the potential scams and manipulations of the penny stock world are taken into account. Again, their rules limit what you can sue their officers and directors for, makes lawsuits less likely, but also could discourage people from suing to begin with. Let's look at the numbers. For the year ended July 31st, 2023, revenue was $3,256,611 compared to $2,602,115 a year earlier. That's an increase about 25%, and it was mostly due to growth in their online messaging and hosting businesses. But their expenses also went up, reaching $4,503,655 compared to $3,619,911. This was due to increasing their revenues in its OTT business, as well as expenses associated with new product development in the financial services segment on the HammerPay platform. In short, they spent more to make more, but their revenue did not overcome the expenses. The company recorded a net loss of over $1.5 million, which is obviously not good compared to a loss of $4.7 million the year before. The year before was much worse. The total amount of expenses is down, but that is mostly attributable to impairment expense during 2022. Their cash flow statement tells us more about where their money is going. During the year, their total cash decreased. The business had cash flow used in operating activities. That means they are spending more money than they are generating. The auditors are worried, and for good reason. The company needs to find new ways to get money either through loans, selling stock, or some other method, or else their future is in peril. Some of their estimates are based on the Black-Scholes model, which is a tricky financial formula to determine their warrant value. The accounting rulebook hasn't changed much for them recently, so at least that's one less headache. Cybersecurity hasn't been a big issue, but they're aware of the risks and are trying to stay ahead of potential threats by keeping up to date with security and educating their employees. In better news, the company, which they renamed to HammerPay, appears to have a total technology platform value of nearly $4 million. In fact, they contracted a valuation specialist to determine the purchase price allocation. The company recognized intangible asset impairment charges of $0 this year and $2,959,286 in the previous year. Currently, they have around $3.4 million in assets and finite use. Lastly, Hammer gave up on their data service in Sierra Leone after trying to operate in that market for several years. This audit report is issued by Frusi and Associates to PLLC, who have served as the company's auditor since 2022. So what's the verdict on Hammer Technology? They're trying to grow, but they've got some serious financial challenges. Their revenue is increasing, but the costs are increasing too, and they have a history of losses and a warning about their ability to stay in business. The biggest risk is probably their financial instability. They need to find money, and quickly. However, their focus on technology and wireless could present opportunities if they can execute their strategy effectively. Looking at their assets and liabilities, the liabilities greatly outweigh the assets, and the company's ability to continue as a going concern is dependent upon their ability to obtain future financing from third parties. It's tough to put a precise value on a company in this situation. With all the information available, a fair price range could be between 1 cent and 3 cents due to extreme volatility. Overall, I'm leaning bearish because of their financial situation. Unless they can pull off a major turnaround, it's hard to be optimistic. Thanks for watching. If you found this breakdown helpful, be sure to subscribe and let me know what company you want me to decode next.